Let's talk about mortgage rates today. Most of you are probably freaking out because we all have the memory of what interest rates were a couple of years ago when we seen them in the 2s and in the 3s. In fact, we even seen interest rates in the mid 3s in January of this year of 2022. But look at where they are today. We're talking 7.5%. And with the Feds recently increasing the Fed funds rate, I'm sure we will soon see a 30-year fixed interest rate in the 8% range. There's even some gurus out there saying that we're going to see 10% and even higher than that. But before we get into the video, what do you think? Where do you think interest rates are going to be? Drop your predictions below. I'd love to hear from you before we hop into this video. But today we're talking about mortgage rates, where they've gone, where they're headed, and are there opportunities out there? Or did you completely miss the boat in purchasing your first home? If this is the first time you're checking out my video, my name is Sean Uyehara. I'm a branch manager with Loan Depot. I'm helping you finance your homes all across the country. Whether you're a first-time home buyer or you're a seasoned investor looking to build your portfolio, we've got you covered. There's links to more information below where you can learn how to get your mortgage right. And I drop videos every single week to help you understand and simplify the homeownership process. And in today's video, like I mentioned, I want to talk about where interest rates have gone because so many of us don't really understand interest rates. And I always find it interesting to go back in time and look at where they were. And you can actually look this information up on Freddie Mac's website. They actually give you a detailed history of interest rates of where they've been since 1971. So let's go back in time so you can get a good idea of where interest rates were back in the day and kind of see where the progression has led us to where they are today. So if you go back all the way back to 1971, when they started keeping track of this, you can see interest rates were actually close to where they are today, 7.3%. That entire year in 1971, they were about mid sevens. And then you can kind of see as we progress into the late 70s, into the early 80s, we start to see a double-digit interest rate. 1979, we start off at 10.3% as far as your interest rate goes. And it looks like the buyers were paying about 1.5 points to even get that interest rate back in the day. You can see during the 80s, it ran rampant. You went to the 12% range, 15% range, as high as 17% in January of 1982. Interest rates for that entire year averaged 16%. How crazy is that? I bet some of you weren't even aware of how high interest rates were back then. It's always funny when I talk to a lot of my clients that actually owned homes during that time. And when they look at interest rates today, they actually laugh and they're like, man, this is way better than what I had back in the day. But the number one question I always ask them is, do you ever regret buying a house back then? And I know some of you might argue and say, well, homes were so cheap back then, but so were wages. It's not like people were making hundreds of thousands of dollars and bought a house, was probably about $100,000, $150,000 on whatever their wage was back in the day. So it was still a decent amount of money. But not only that, when you looked at the amount of interest that was paid over the life of the loan, it's an enormous amount. But they probably sold that house for a ton of money and they made a good financial decision at the end of the day. And not one of them that I've at least had to deal with yet has ever said to me, I wish I would have never owned that home back in the 80s, Sean. So that's also reassuring to know that no matter what we're dealing with today, there is a payoff at some point, no matter what the media tries to tell you or any of your friends or family. It isn't until we hit the early 90s when we finally start to see interest rates come back down to single digits. And by single digits, you can see here, we're talking 8-9%, still higher than where we are today. However, people still bought homes during those times. This is the crazy thing about the real estate market is that no matter what, whether the market goes up, the market goes down, there are always buyers and sellers in the marketplace. So there is always a need for a house. You can continue to rent, and that's fine if that's your prerogative, but you are paying someone else's mortgage. If you can ride this wave out, you will come out on top on the other side. You just have to have more patience. We got spoiled over the last couple of years, and we have to acknowledge that. The last 2 years of the real estate and mortgage world was complete chaos. People were buying homes and putting over $100,000 over the asking price just to get their offer accepted. People were willing to pay anything and everything because interest rates were so low, and they cashed out when selling their property and moved to whatever part of the country they could work from because of the ability to work from home. So you had so many of these external factors that drove the market that we've never seen before. When I got back into business in 2006 and 7, I heard all these stories about people making insane amounts of money in the real estate industry. And the last couple of years, it was almost the same thing again, because almost anyone could qualify for a house, and anyone that wanted to sell a house sold their house in a day or two, and then they went and bought another house because they cashed out, they had a ton of money, and they were willing to pay whatever it was to buy the property. You didn't have to convince anybody. You didn't have to educate anybody. It was probably the 2 easiest years of being in the mortgage industry. Now think about where we are today. Interest rates have climbed. Homes are sitting on the market for longer periods of time. Now you have to have a good strategy. And for some of you that have been watching my channel long enough, you know that I've been talking about strategy since day one. Forget the rate, forget the quick and easy route. I'm all about the right strategy with the best game plan. We'll get your house sold with the right agent and also get you a good deal on the buy side. And this market today is proving that to be a fact. Now, if we fast forward to 2022 on our graph here, you can see that we started off the year 3.45% as an average. And now today we're seeing rates in the mid 7s. We've more than doubled this year. Probably some of the fastest that we've ever seen interest rates go up. I know in my career, this is the fastest I've ever seen it. And it does remind me of the time I bought my first house. My interest rate was about 7% when I bought at the time. Although this market is completely different in terms of the mechanics of what's going on, the interest rate that we've seen, I've personally seen this before, and I can tell you from a buyer and from someone who's been in the mortgage business as long as I have, this isn't anything new. You just have to have a different strategy, and banks will come up with different programs in order to help people buy houses. But instead of chasing the shiny object, you need to make sure you have the right strategy. Now, if we were to take a quick look and see what the increase in the interest rate meant to your monthly mortgage payment, let's take a look here just at a basic mortgage calculator. If you took a $400,000 loan amount at 3.5% interest on a 30-year fixed mortgage, your monthly principal and interest payment is $1,796. Now, if you take the same mortgage loan amount, $400,000, and you apply a 7% interest rate, your principal and interest payment is going to be $2,661, or an increase of $865 a month. Holy smokes, that is a lot of money. But there are strategies to help get your interest rate back down. You don't have to look at the 7% rate. Sellers are way more negotiable today than what they were over the last couple of years. And there's programs like the 2-1 buy down or even the 3-2-1 buy down, where you can get a below market rate for the first couple of years of your mortgage, and then you'd be stuck with the 7% or whatever the market rate's going to be for your specific loan. Now, I know you might be saying, well, you're in the business and you need people to buy and sell homes in order to make money, so you're always going to say that now's the time to buy. I see a lot of those comments lately, and at the end of the day, a lot of the clients that I'm seeing buy homes today are doing it because they really need to. There's certain reasons where we've had clients that were getting divorced. We've had clients that were elderly that they went from a 2-story to a single-story home. We've also had clients where their kids are now off on their own. Parents don't have to worry about them no more, and they want to downsize because they want to be able to travel, and they're looking into their retirement years. So there's a lot of reasons why people will buy houses this year. And as you know, I'm gonna shoot you straight. I don't do these videos to convince you whether or not you should be buying a house, because more than ever in this time, you need to look into your own finances and your own budget as to whether or not this is the time for you to purchase a home. The last couple of years, you could have bought a house simply because interest rates were so low. And that's really why a lot of people got off the fence and bought. But now with a 7% rate or even a 6% rate, you want to make sure that you're doing it for the right reason, not simply because you're doing it out of fear or whatever else. You want to make sure that the budget that you're setting aside for your mortgage payment makes sense. Now, interest rates have become very volatile lately. And in the mortgage business, we have what's called a mortgage rate reprice. So what happens when this occurs is during the day, we have a secondary department that looks at the overall bond market and they see what's happening out there in the world. Depending on good news, bad news, they determine how interest rates are priced for the day. And because things have been so volatile, we will literally have multiple reprices throughout the day. So what this means to you as a buyer is that you might have talked to your lender, let's say at 9 o'clock in the morning, and they could have quoted you, call it a 6.5% interest rate. But by 12 o'clock that day, some crazy stuff could have went down in the market where now the market's retreating and then that interest rate is no longer valid. So what they'll do is they'll close down the lock desk for a loan officer to lock their interest rate in while they reassess the market, and then they release interest rates again. That interest rate could have went from 6.5 to 6.75, 6.875. We've even seen on some days interest rates go up over 0.5% in one day. And why is this important for you to know? As you're shopping around for your loan, you need to be aware of these kind of things, because if you're dragging your feet thinking you've got a whole day or maybe a few days to decide on who you're going to work with as far as your financing goes, that rate that you got quoted earlier in the day or maybe earlier in the week could certainly be gone. So you have to act quickly in terms of working with your lender, but also understand that the right strategy in place can offset some of these fluctuations in the market. So this is where it is advantageous as a buyer in this market, because sellers are a lot more negotiable these days than what they were the last couple of years. You know, everyone wants to talk bad about today's market. However, when you think about what happened the last couple of years, there wasn't a lot of complaining going on other than people being frustrated. But when you were buying a house in the last few years, you had to be willing to go above the sales price of the house. Now, depending on what part of the country you're in and depending on the sales price of the house, that could have easily been $5,000, could have been $10,000. Or we've had clients that had to go $100,000, $200,000 above the asking price just to get their offer accepted. And you had to have had this money in cash. But so many clients are limited on their budget. That eliminated a search for a lot of people, because you didn't have an extra $10,000, $20,000, $30,000 laying around that you were willing to offer over and above the sales price of the house. Now, couple the fact that sellers weren't paying any closing costs, or it was very difficult for them to agree to pay that for you, there goes another $5,000, $10,000, $20,000, depending on the price of the home, that again, you have to be willing to pay. When you eliminate those two buckets that you don't have to worry about coming to the table with, and the sellers are willing to pay your closing costs today, if not some of it, maybe all of it, that helps out so many buyers get into a home today with less competition. We've seen some inventory increase here in Las Vegas. However, the bigger problem, in my opinion, that we're starting to see is some of the stagnation out there. And what I mean by that is that guys like myself, or maybe even you that you might be watching this video, you bought your house or you refinanced in the last couple of years, you're sitting on a 2 or 3% interest rate. Now, why would you sell your house for 7% or even 5% today? There's really no need unless you have a true desire to sell and to buy. But I've been looking for another home for myself. I even went to the builder. I looked at some of their properties. However, I'm not going to necessarily rush to give up my 2.5% interest rate on my current home. So all of this inventory that maybe should have been coming on the market is not necessarily going to hit the market right now, because sellers do not need to sell unless you're truly in a position where you have to get rid of your house to capitalize on that equity that you're sitting on to then go and buy your next property. So that to me makes the market a little tougher, where inventory will be suppressed because sellers are not really incentivized to sell right now. But as a buyer, there is still fewer competition out there for you to deal with, simply because many of you are just so terrified of seeing a 7% interest rate right now. Even though interest rates are higher and you can see where they've been, where they've gone, and this year, yes, they have doubled. There is no doubt about that interest rates are higher, but they are higher compared to the last couple of years. If you look at where they've been over the last 50 years, we're kind of right in line with where they've always been. They've always been about 7 to probably 8% over the last 50 years. So this isn't anything to be terribly afraid of, in my opinion. What we need to talk more about is the fact of having the right strategy to purchase your home, whether you're looking at a 2-1 buy down, you're looking at a 3-2-1 buy down, or maybe even an adjustable rate mortgage, or maybe even an interest only loan. I've even heard some banks talking about bringing a 40-year mortgage to the table. I wouldn't be opposed to looking at any of these options. However, you have to understand what your game plan is with your house. Are you going to be in and out in a year or two? Maybe you're going to be in and out maybe in 5 years. Or you know what? I'm willing to live in this house for the next 10 years. There's a lot of questions that need to be answered today that probably weren't being asked the last couple of years because the market was just too easy. So don't rush into a purchase today. Make sure you have the right strategy, have some patience with your purchase, and do some due diligence. You can still find great deals out there in the marketplace. You will get whatever you focus on. If you want to believe that the market's going to crash and you're going to be doom and gloom like the media and a lot of social media people want you to believe in, then that's on you. You can totally wait. However, if you're of the opinion that there is opportunity, I guarantee you will find it. So be careful of what you subscribe to. Be careful of what you believe in. Either way, it's your decision as to what you want to do with your home purchase. I'm of the belief that opportunity is out there. And I'm not just saying that simply because I want to convince you to buy a house. Totally not the case. I say that because I'm seeing many clients, not only here in Vegas, but across the country that we are personally financing, get deals on their homes. So I'm not going to subscribe to what the media tells me. I'm not going to subscribe to the naysayers. I look at actual people that are winning in this market, and I'm a believer in that. And if you want to become one of those winners and want to look at the right strategy, make sure to send me an email. We can get you pre-approved to help you with your house search, or forward this to a friend who could use some positivity. Thanks so much for watching, and I'll see you in our next video.